Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. So this is Shen Chu. I'm the moderator for today's webinar. Today's title is Leverage Your Portfolio with Structured Warrants. Now, I'm sure if you are seasoned investors in the market, you will have seen some stock code that end with a dash C something or dash H something. And these are not ordinary shares, but these are structured warrants. All right. So today we are going to learn a great deal about structured warrants. So today we have invited a renowned issuer from Macquarie to share with you how to leverage your portfolio with structured warrants. So if you are ready for this session, please type yes in the comment and let me know if you are ready for these sessions. Wow. All right. Cool. Thank you so much for everybody's response. Yay. All right. So today, we're going to learn about structured warrants. As you know, structured warrants is a leverage tool. It can help you if you know how to use it effectively, but it can also, destroy you if the market go against you if you don't know how to use it effectively. So today, you are going to learn how to master this financial tool to help you to achieve your financial objective. So disclaimer is whatever we share on this webinar is only for educational purpose. In no way that I give any recommendation to buy or sell any products or buy or sell any structured warrants. If you decide to do any trading or do any investment decision, you do it at your own risk. Okay, none of us like Bursa Malaysia, the speaker, Macquarie or Kaming or me are responsible for all your financial decisions. Is that okay? All right, so allow me to introduce the speaker today. So I'm very excited to be able to work with him and invite him to our webinar this time. Now, he's none other than the head of warrant sales of Macquarie Capital Securities in Berhad, and he is Kaming. All right. So Leong Kaming is the head of warrant sales in Malaysia for Macquarie Capital Securities. Now, Kaming is responsible for the issuance of structured warrants and organizing and speaking at various warrant seminars and workshops. We have also hosted Kaming before. He graduated from the University of Nottingham with a master's degree in engineering. Now, prior to joining Macquarie, Kaming worked as a dealer in the treasury division of a local bank where he specialized in currency, money market, and derivatives products. So without further ado, let us hear from Kaming. Over to you, Kaming.
Thanks a lot, Shane. Just doing a final sound check here. If you can hear me loud and clear, please type M on the chat. Type M for Malaysia or M for Macquarie while I try to share my screen right here. Okay. Thing looks good. And if you can see my screen here, please type A just to make sure that I'm showing the correct slides here. So I would like to start today's session, of course, by thanking Bursa for organizing this event, which will benefit our retail investors in Malaysia, and also for Macquarie for us to actually give all of you a brief introduction about warrants, how it started, how you can make full use of warrants to, number one, to enhance your portfolio return, number two, to also protect your portfolio if bear market is near or right now, if bear market is here, what can you do with your portfolio? So today I'm going to unveil a few things, but of course before we go into the details, go into the technical items, of course we need to go through the basic items first. We're going to start this slow. So in terms of structured warrants, is not something very foreign, to be honest. I think me myself, I have actually done more than 60 seminars and webinars since I joined Macquarie in 2017. And as you can see here, this is a chart of the structured warrants market in Malaysia in terms of the turnover, in terms of interest. As we can see here, highlighted in the blue color, there is a huge difference between like the 2017 and 2018. So why does all of a sudden Malaysian investors suddenly just fall in love with warrants? Of course, to be honest, being Malaysian, me myself, I know that we like cheap stuff, we like discounted, right? So here it is. Here's the reason, because it started in 2018. Bursa and also the MOF has also waived the stamp duty for structured warrants. Therefore, all of a sudden, investors feel like trading the structured warrants itself. Number one, there's steering. Number two, you do save on the stamp duty. Of course, if you look at per contract basis, it's not big. But if you look at as a portfolio perspective, it's actually quite big, because it's actually 1 ringgit per 1,000 value. So do take note about this. But of course, this stamp duty exemption only lasted for 3 years. So 2018, 2019, 2020. So this year onwards, yes, there will not be any stamp duty exemption. But so far, we have not seen a huge decrease. The interest is still actually there. Actually, in fact, much higher than the 2017 level. And subsequently, after moving on from the stamp duty exemption, why investors continue trading a lot of warrants? Mostly is because there's a lot of things happening in the market. So if you realize actually 2018, maybe mid 2018, there is a trade war. Our dear President Donald Trump actually started the trade war with China in mid 2018, which stirred a lot of volatility in the market. And subsequently in 2019, the focus shift back to Asia. We have the Hong Kong protest, which lasted for about 6 to 7 months until we got hit by COVID-19. And of course, no surprise in 2020 why there's a surge, because pandemic. There's a lot of thematic play, especially the glove, the vaccines, etc. So of course, during this period of time, a lot of trading interest is actually focused on the warrants over glove. But subsequently, after the glove, we do see the pickup in terms of the interest for the tech names like Panthermaster, DNO, which is I think every one of you will be familiar with, which I will not be touched on, going a lot more in details. But essentially, what are warrants? This is the key question. First of all, people will ask us, there are a lot of different warrants, yes. So you need to know what are structured warrants. So there's two concepts you need to know, because you need to know when to buy a call, which I will explain now, when to buy a put. So there's two different types, remember. Call warrant represented by a C for China. This is the type of warrant you should be looking at when you have a bullish view, which means you believe that this particular stock or index will go up, then you buy a call. Why? So because the value of this particular call warrant will actually increase only if the share or the index goes up. So if the index or share goes down, then of course you will lose money on your call warrant as well. On the other hand, if you are bullish, so you are bearish in the market, or you're pessimistic, you think that there are no more catalysts in the market, perhaps you want to look at a put warrant, which is represented by H. H for Holland, which I will show you like the full code later after this. So a put warrant allows you to actually gain in terms of gain in value when the share price goes down. So it moves in the opposite direction. This is a very key concept here. Put warrant moves in an opposite direction as per the underlying share or index. And next one, how, even though we know what is a call, what is a put, but looking at the warrant itself like this, how did we know what does this represent? So usually this is the analogy, this is the methodology on how we actually name this warrant. And the front part, which is the underlying, in this case, DNOCH, the DNO part represent the underlying, which is DNO Green Technologies. Move on after the dash will be either a C or H. C is actually a call warrant and H is actually a put warrant. And lastly, the H is actually just a series, just for investor to differentiate one warrant from another one. Us as an issuer, we do not have the right or we don't have the power to decide what alphabet do we want. Usually it's alphabetical order or numerical order based on first come first serve basis, and Bursa is the one that decides this. Types of warrant. So back into the major question, there are a lot of different warrants in the market. How do I differentiate? First of all, before you even trade, you need to know what you are trading. That's the key thing that we always mention during all our webinar. And by the way, if any one of you have any questions throughout my session, please feel free to leave your question on the Q&A. Shane will probably, me and Shane will probably look at it after my session, and we probably have quite some time to answer one by one, hopefully. And in terms of the types of warrants, you can see the contrast right here. In terms of structured warrants, there's two types, but company warrant, bear in mind, there's only one company warrant, there's no two types of company warrant. In terms of how you differentiate, I explained earlier, structured warrants, there's C and there's H. So if you want to trade a call warrant, you just need to have an existing CDS account, go into your platform, type, for example, Axiata C67, there you go. You can start trading this warrant. Or if you want to have a downside, you want to trade the downside market, which means you expect the market to drop, maybe you can look at HSI HGK, which is a put warrant, which move in opposite direction. Company warrant all starts with W after a dash, which is, I think DNEX is one of the more popular company warrants that we see in the market. So do know the difference between them. In terms of issuer, there are two different type of issuer. For structured warrants, they are all issued by third party, which means if we want to issue a top glove over Axiata, we do not need to go to the board or management of Axiata to say, hey, I want to issue a warrant over Axiata. We do not need their approval. But on the other hand, if you're talking about a company warrant, they need approval from the company. And why is it so? Is mainly because of the settlement. If you look at point number 5 here under expiry settlement, you will actually realize that most of the structured warrants, actually 99% of the structured warrants are actually cash settled, which means on expiry date, the issuer do not pay you any stocks, any shares or any index. Everything will be settled in cash. So this is what we meant by cash settled. But on the other hand, if you look at company warrant, it's all actually physical settled, which means you have the right to convert your warrant into the mother share, which means it will might cause some dilution to the underlying share. Therefore, you actually need the company's approval for company warrant. All right. So I hope everybody is clear on this. In terms of tenor wise, it's also different. Structured warrants is much shorter, ranges from 6 to 12 months. Of course, we do see some warrants which is slightly more than 12 months, maybe 1 year and 1 month or 1 year and 2 months. But company warrants is actually not surprised to see some company warrants go up to 10 years. All right. And last point to take note here is for structured warrants and company warrant, if you look at under market maker item, structured warrants, we have identified market maker, designated market maker, which means we have the obligation to put in a buy and sell price, okay? But for company warrant, there is no buy and sell price, no obligation one, which means the person who is holding the most company warrant, they can decide whether they want the price to go down, up or down. It's based on demand and supply. But for structured warrants, it's different, especially for Macquarie case. For us, is we have the obligation to put a buy and sell. Let's say in this case, Axiata C67, if you bought into Axiata C67, if Axiata mother share just go up like 20 cents, the Axiata C67, this call warrant, the buy and sell price also need to move in the same direction. So this is the main difference here. So at least you have some assurance that you buy into this, you get the direction right, you can make money from this. All right, and I just want to quickly answer a question that I see on the chat here is that I think one of the attendees actually asking what's the difference between warrant and option. Of course, in terms of concept, they are the same because options also you have call and put options. But the difference here is warrants is actually traded. It's actually traded in Bursa Malaysia, which means you need a CDS account to trade. But options is usually over the counter, means it's actually not traded on an exchange. So this will be the main difference here. All right, moving on to the next slide. Of course, I've been talking a lot about different types of warrants. I also, wouldn't want to give you more, further confuse you about that. So those are the main things you need to know about different type of warrants. But of course, in Malaysia, we do have this special type of warrants. It's called index warrant or ETF warrant. But so far, we take pride of what we have done on the index warrant space because we are the biggest issuer in terms of the index warrants, in terms of turnover, in terms of number of warrants we issue, we are definitely the number one. And what are the things that we have here? Let's see. So far in terms of the index where we cover, we have the US S&P 500 warrants. We have in Hong Kong market, we have the Hang Seng Index, and also we have the Hang Seng Tech Index, which is something new. So for those who are tech, you are really inclined to tech, do make sure you stay tuned, because towards the end of this particular session, I will share more about this new index called the Hang Seng Tech. Moving on, next one will be the local KLCI, and we have this A50 China ETF as well, warrants over this particular ETF, just so to provide more opportunity for our investors in Malaysia to gain access to all these markets without having to open an account there. All right. So for those of you who have been trading like Hang Seng futures, S&P futures, yes, do feel free to look at warrants as well, because all these warrants essentially we refer to the futures contract. So if you're trading Hang Seng, what you should look at in terms of the underlying will be the Hang Seng April futures right now. Same thing for KLCI. And the beauty about trading index warrants, you compare index warrants versus those normal like Axiata call warrant, like for example D&O call warrant. So the difference here is that for D&O, Axiata, they are all single stock. So you are subjected to something called single stock risk, which means if, touch wood, if something happened to this company, like what happened to MyAG after the election, it gaps down, it limits down, then of course, your particular warrant might experience huge losses. So the difference here is for index warrants, you have more than 50, the index have more than 50 stocks in general. Of course, for KLCI, we have about 30, which is a bit smaller, but unless all 30 stocks limit down, otherwise you will not experience something like what MyEG warrant experienced during the last GE general election. So that's the first advantage that index warrants have. And number two is you do not have to really go through, identify which stock will perform. As long as if you think China will perform, look at A50 China ETF. If you think, like, for example, US will underperform, now S&P 500 is all-time high, you might want to short the market. Having to have an account to short, you need margin. But now, on Bursa itself, you can do so by just buying a put warrant over S&P 500. All right. If you want to try and see, how to actually, short the market, you can probably type S&P 500 on your platform, and there are a list of warrants that you can choose from. Of course, bear in mind, C for call warrant, H for put warrant. Okay, remember that. And if you want to trade warrants, just need to have any account with any brokers, like Maybank, CIMB, RHB. As long as you have an account, you can actually go ahead and trade. Moving on, of course, we know what this warrant is, and now I'm going to explain more on the key warrant terms and why am I emphasizing a lot on warrant terms, because if you don't understand how warrant terms, what does it represent, right? It's very hard for you to select a warrant which is suitable for yourself. So do pay attention. And of course, I think due to the limitation of the time as well, I can't be covering all warrant terms. I have highlighted here, these are the warrant terms that we can find. Probably you can have exercise price, exercise ratio, break-even price, gearing. So today I'm just going to focus on 4 important one. Do take down this note. 4 important one that you need to know, which is delta. What is the delta of a warrant? Warrant sensitivity, theta, and also effective gearing. Why? How come the name sounds so weird? Delta, theta. Basically, these are the Greeks, same as options. For those who are familiar with options, you definitely know what are these things called Greeks. So for more information, if you want to go through and understand the definition of exercise price and all, you can go to our website here. I've highlighted my HDR, our website here, our URL. And for those of you who are interested, lazy type, you can just scan this QR code. Moving forward, for most of the slide here, I will actually put a QR code. So for your ease of reference as well, you just have to scan it, it will bring you straight to our website. So first of all, delta. What exactly is delta? Before we really focus and explain more about delta, I think we need to explain about this in the money, out of money. I think right until today, there are still a lot of investors who are not familiar with this concept of in the money, at the money. So let's say, okay, plain vanilla, we go for a call warrant, which means you are bullish, okay? You're bullish in the market. So what happens if this particular warrant is in the money? How do you know whether the warrant is in the money? Look at 2 things. Look at current share price, look at exercise price, okay? You look at these 2 things and there is only 3 outcomes. If the underlying price. Let's say if you look at Axiata, okay, if Axiata share price now, maybe Axiata share price is about 370, and the current exercise price is actually 340. Exercise price 340, current share price 370 is actually higher than the exercise price. If this thing happen, then the warrant is considered in the money, which is the first bullet point here. If you read the definition, current underlying price more than the exercise price. What if the exercise price and the current share price is the same? If it's at the same, we call it at the money. It means basically it's at the money. Lastly, out of money means actually there's no value. This particular warrant has no value at expiry. So usually what happens is the exercise price is here, underlying share price is here. So this is out of money. And these three terms only does matter if you plan to hold until expiry. But let's say if you are just a trader, you are just trading short-term 1-2 days, whether the warrant is at the money, in the money, out of money, actually it does not affect you. Okay, what you need to see is delta. Do not look at moneyness if you are actually a trader or regardless you're a day trader or swing trader. But if you plan to hold until expiry and expect to have the money from issuer, then yes, you look at moneyness. You look at the in the money, at the money, or out of money. And delta is often used to measure the moneyness. Okay, most of the time, like how we gonna like measure in terms of how do I know whether this high delta is considered what, low delta is considered what. So general rule of thumb is in the money warrant. So those warrant with exercise price lower than the current share price, generally they have very high delta. So if you see the delta more than 75%, right, means the warrant most probably is in the money. If the out of money warrant, right, they are totally different. They're totally opposite of the in the money warrant. The delta is super low, probably less than 20%. So the tips here is that what you need to know is that Macquarie, we will usually widen the offer price. Okay, we will widen the offer price because we want to discourage investors from further buying it. So let's say, okay, the price right now is 5 cents, 5.5 cents. Once it hit low delta, like delta below 20, what we do is we maintain the 5 cents buyer so that if any investors want to sell, they can sell back to us. But we will actually widen the offer price to discourage you from further buying it, because generally, if the warrants is actually too low delta or too high delta, it's not suitable for trading or even buy and hold. Okay, this is the reason, this is the rationale behind why we want to do this. So do take note, I think most of the slides here will have a light bulb, which means those are the important tips. So if you can't catch the whole, you can't actually copy down everything here. So maybe you can just remember those words highlighted or the sentence highlighted next to the light bulb. All right, moving on to warrant sensitivity. This is very important when it comes to if you are the day trading kind or you're just expecting a small movement in the mother share and you want to make money out of the warrants. Warrant sensitivity is something that you should look at. And I have actually pulled out this comparison on our Life Matrix Plus between two different Mr. DIY. Of course, these two warrants is actually issued by Macquarie. We have two warrants here. All the terms are there in terms of expiry, everything you can check. But now we are focusing on sensitivity. So, as an investor, by just looking at this comparison here, which Mr. DIY call warrant do you think is more sensitive? I will give you about 10 to 50 seconds to basically answer this. You can probably put it down here. Okay, so on the left is actually, the warrant on the left is actually CS. The warrant on the right is actually CN. So I hope you can see here the sensitivity. Sensitivity for CS is 6.94. Sensitivity for CN is 2.86. So let me see your answer. We have quite some mixture here in terms of the answer. Some say CS, some say CN, but I think most of you actually answer is CN. So let me show you the answer. Okay, the answer is actually Mr. DIY CN. Okay, and right now let me just explain to you why is it not CS? Why CS is not more sensitive in this case? When you really look at the sensitivity, right? If you want a more sensitive warrant, look at the tip here. You need a lower number of ticks. So the lower is this number, which means the more sensitive is the warrant. Why is it so? Because if let's say the sensitivity number is lower, means that this warrant this Mr. DIY, right, only need to move about 3 ticks. So for CN, Mr. DIY only need to move 3 cents in order for Mr. DIY CN to move by 1 tick, which is half a cent. But for Mr. DIY CS, it's double. Mr. DIY need to move 7 cents, then only CS will move by 1 tick, which is half a cent. So in this case, Mr. DIY CN is actually the more responsive one. So ticks is actually, okay, tick size, 1 tick on Bursa, if you're trading a stock which is below 1 ringgit, 1 tick means half a cent, which means like the smallest spread between the buy and sell queue. That's 1 tick. All right. So 1 tick for a warrant below 1 ringgit is actually half a cent. All right, moving on to theta, which can be defined as time decay. This is also another Greek. Why I want to highlight here, because this is something a lot of investors actually they don't understand. They don't understand that structured warrants do have limited time span. To be honest, this is public information. All structured warrants have expiry date. It's just whether the expiry date is longer or is shorter. All right. So this time decay happens to all warrants, whether it's also faster or shorter. So this chart actually applies to all warrants. So this is how the time value of a warrant will perform throughout the lifespan of the warrant. So if you can see here, let me just draw. So okay, this will be the listing date. Okay, this is day one. Day one of the warrant, maybe we say is cost us 10 cents. Okay, so this 10 cents, regardless whether the market share is moving or not, this 10 cents will slowly drop all the way until 0. Okay, drop until 0 on the expiry date. But let's say if it's a straight line, then it's easy, because let's say if the listing date to expiry date is 6 months, and if there's 6 cents time value, you can easily calculate 6 cents divided by 6 months. 1 month, it will drop by 1 cent. But it's not that simple, because this is an exponential chart, which means, let's say if you hold for 1 month, okay? Let's say you hold for 1 month here, okay? You hold for 1 month here. Maybe 1 month here, you look at the price here, is actually 9 cents, okay? Which means if you hold for 1 month, maybe you lose 1 cent time decay. But on the other hand, if you hold for maybe, we put here, you hold for like 5 months, okay? From day one listing date, you bought it, you hold for 5 months. Here, maybe it costs you about 0.04. So the longer, let's say the longer you hold, of course, the time decay will be higher. That's number one. Number two is, let's say, assuming that if you only buy at this point, last month, this is 6 months, right? So last month you go buy into this warrant, right? And this 4 cents go to 0, which means within 1 month, if nothing happened, you already lose 4 cents. So this is the reason why we always discourage investors to actually buy the warrant when it's near to expiry. So this period of time here, like the last part highlighted in blue here, this is a time that you shouldn't be buying warrant. Usually warrant with 1 month or less to expiry, please avoid, because that one is very dangerous. You wouldn't know. You look at the value today 5 cents, maybe tomorrow become 3 cents. All right, but I think for Macquarie warrants, one thing is you can always check on our live matrix, which I will share later, so you can still estimate, on a daily basis, what will be the time decay. So let me just cancel everything here, clear all drawings. And all right, so for time decay, what is the tip? So the tip here is warrants usually with longer time to expiry, they will experience slower time decay. Your aim here when you trade warrants is actually not to hold and wait all the way until expiry and expect a good big payout from issuer. Your goal here should be riding on the trend. So if you catch your stock which is on an uptrend, instead of making like 5% on the stock, because it's a warrant, you might make 10% or even 15% because of the gearing effect. That should be the aim of structured warrants, not buy and hold until expiry. And the last warrant term that all of you should pay attention on when it comes to warrant selection will be effective gearing. So of course, a lot of you will understand what is gearing, but trust me, gearing has no meaning at all. You need to look at effective gearing because effective gearing takes into account the moneyness of the warrant. Gearing is merely just a calculation. It does not take into account whether this warrant is in the money or out of money. So to put it into layman terms, let's say a warrant X has an effective gearing of 8 times. So what does it mean? Okay, it merely means that for every 1% change in the share price, the mother share price, this particular warrant X will move by 8%. So scenario one, if you get it right, you are very accurate. You bought it when it's on the uptrend. The mother share is up 2%. If you bought into warrant X, this warrant X will give you a 16% gain. But what if the market go against you? What if you get it wrong? If the mother share goes down by 4%, your warrant X will also lose 32%. So no such thing as the higher is the effective gearing, the better it is. The higher effective gearing only means that the warrant will move in bigger percentages. All right. And of course, it will give you higher profit potential. At the same time, you will be subjected to a higher risk as well. So it's a high risk, high return kind of product. And lastly, what I want to really emphasize here is that if you are new to structured warrants, try not to go for warrants with too high effective gearing because the high effective gearing warrants are usually more risky. How to select warrants? Of course, after I go through all these warrant terms, I'm pretty sure, I hope, most of you guys understand, the importance behind all these different warrant tools, warrant terms. We will move on to how you select warrants. 4 simple steps. We always mention, one thing about us, we are consistent in terms of, this guiding about the simple steps because investors will be confused, if you have 4 different types or 5 different ways of selecting warrants. So for us, we are consistent in terms of 4 simple steps. Just need to remember first, you need to have a view. So if you do not have a view on a particular share or index, it means you don't know whether it's going to go up or go down. Don't touch warrant. If you want, you might just go buy the mother share directly. You shouldn't be looking warrants if you don't have a view, either go up or go down. After having a view, then you need to think. You need to ask yourself, how long do I think it takes for this stock to reach my target? Is it 6 months? Is it 1 year? Is it 2 years? So if your target is actually 2 years, forget about warrants. Just go buy the mother share. Only if you have a short-term view, maybe talking about 2 to 3 months, you expect 2 to 3 months, this particular stock will outperform, and you are confident that they can do it. Yes, then you can look at warrants. But why the question? How long? Because if your time horizon is talking about 3 months, right, then you probably need to look for warrants with 6 months to expiry to avoid the steep time decay. But let's say if you're a day trader, then it doesn't really matter to you, different expiry, just to make sure the warrant, the day you actually bought into warrant is not the last trading day for day traders. Third step, effective gearing. I mentioned earlier, this is how you manage your own risk. You need to find a balance between your return and risk. But for us, we always say always manage your risk first, because if you are okay with the risk, then the return will come as well. This is something that you should focus on. And last but not least, let's say you go through all these 3 steps, you are still stuck with 3 to 4 different warrants, which is, which looks good, which fits into your requirement. You look at the liquidity of the warrant. But when it comes to liquidity of the warrant, actually a lot of investors, even seasoned investors, we do have an argument on this in terms of, what is the definition of liquidity when it comes to warrants. So let me go through this example with you, and probably you will understand a little bit more, because throughout my career, before I joined Macquarie, when I was more involved in the stock, I always think liquidity equals the volume traded. The more people trade means the warrant is liquid. Apparently, that's not the case, okay, for warrants, but it applies to stock. So for this stock that I'm showing here, traded 8.8 million, even though it's actually priced at about 8 ringgit, which means this stock is actually pretty liquid, I would say. And you look at the buy and sell quantity, is actually pretty huge as well. It's more than 1 million. So this stock is definitely liquid. But how about warrants? So question back to you. Let's say if you have 2 warrant A, warrant B, price-wise, pretty much the same, 16 cents. Which warrant would you select, and which warrant would you think is actually more liquid in this case? So take your time to look at the quantities, look at the spread, look at the traded volume. Probably can drop your answer on the chat box as well. Just wanted to have a gauge on what you guys think is a liquid warrant. Well, actually, I do see a lot of people selecting A. You know, a lot of A. And I think there's some comment that easier to sell. Yes, actually, of course, why I mentioned about liquidity, because easier for you to sell. If you don't have liquidity, right, which means you want to sell, also no buyer take from you lah. So it is very important to know how to identify warrants with good liquidity. Thank you everybody for your participation. Thank you for the support. I see a lot of answers, mixture of A and B. But of course, the answer here, before I give you the answer, I need to tell you how to compare liquidity of a warrant. Two things, okay? Two things. Number one, you compare the buy and sell volume. So I can actually draw it for you. So actually for warrant A, you look at the buy and sell quantity. Okay? Look at the buy and sell quantity for this one will be A, and look at the buy and sell quantity for B. Which one is higher? Definitely B, right? B has higher buy and sell quantity. Second thing, you look at the spread, okay? The buy-sell spread between the buy-sell price. Okay, which warrant has a tight spread? Of course, as an investor, why you want to look for warrant with tight spread? Because in this case, warrant A, imagine you buy 100,000 units. Okay, maybe only 78,000 got hit. Okay, it got matched. But when you want to sell, you can't sell at 15 and a half cents because there's no buyer. The buyer is actually at 46 cents. And the worst thing is that you can't even sell 78,000. There's only 46,000 units available for you to sell. So definitely in this case, warrant A will not be a good warrant. All right, well, warrant A will not be a good warrant. The answer should be B, because B has number one, higher buy and sell volume, which allows you to, even if you buy 500,000, you can easily just sell back to the issuer with this kind of quantity here. Number two, the buy and sell spread is actually on tight, which means if you buy at 16 cents, you can, next minute, if you think, oh, something is wrong, it's going on good trade, you can sell back at 15 and a half cents with ease. Liquidity can also be defined on how easy you can get in and out of the market. So lastly, why not A? I have explained, but to be honest, traded volume doesn't really matter when it comes to liquidity, because traded volume is always historical data. Okay, it's already happened. So it is possible that maybe in the morning session, the traded volume is actually quite high. A lot people buy and sell in the morning, but afternoon nobody buy and sell. So even though if morning a lot of people buy and sell, a lot of traded volume, but if afternoon you look at the buy and sell quantity is not ideal, then just walk away. Don't buy. At any point of time, you should actually look for warrants with good liquidity. All right. So I hope that moving forward, if you were to choose between 2 or 3 warrants, always choose a warrant like warrant B. Okay, choose a warrant with a lot of buy and sell quantity. Other factors that you should also consider, I would say a few things. Of course, the issuer, the market maker as well, which is Macquarie. Choose an issuer who is financially sound and also transparent, because if you buy a warrant from an issuer who is not financially sound, if the issuer gets into trouble in terms of financials, then your warrant might be worthless. So this is the first thing that you should consider. Second thing, warrant sensitivity. I have also explained. So if you are trading a short range, maybe you expect the mother share to only move 5 cents or 10 cents today. So you might want to choose a warrant which is a little bit more sensitive. I would say 3 ticks to 4 ticks will be good in that case. Please avoid these 2 different warrants, sold out warrants and widespread warrants, because these 2 warrants, I mentioned earlier during liquidity, these 2 warrants, they have a gap between the buy and sell. So when you see that the warrants have a gap between buy and sell, then you just avoid, because the gap itself will actually increase your cost of trading. You buy high, you sell lower. So it doesn't make sense for investors. So remember, if you're trading warrants, remember not to buy warrants which is sold out and also on widespread. some useful warrant tools. Yeah, but perhaps maybe we can actually look at the questions in a while. Probably just one more section here, which I'm very excited to share because you know the theory, you know how to select warrants, but how you make money from warrants, that's the key, right? So for Macquarie, we invested a lot. We really invested a lot in the kind of tools that we provide to our investors for free. We do not charge any money for this, even though we spent a lot of money to build this. So this warrant heat map was introduced last year, July. Why we want to build this? Because we want to provide you a market trend at your fingertips, which means at any point of time you feel like you want to know what is the latest trend. For example, a stock that you like, you want to know the trend is bullish or bearish, just go to a website. You can perhaps just scan the QR and try it yourself. Go to the website, just try to sort it out, look at the colors, learn how it works. So that's the aim. First feature of this warrant heat map, why we call it warrant heat map? Because number one, colorful. It's very easy, it's not identical, it's very easy to identify, whether this particular warrant is it bullish or is it bearish. So number one, allows you to identify momentum or trend. Weekly momentum usually is for shorter term. Monthly trend is usually for medium term, not long term. As I mentioned, warrants is actually not for long term investment. It's actually for short to medium term. Therefore, we have the weekly and monthly. And if you want to find out how we, come up with all these different points or different colors, you can actually check out the color indicator. If it's a red color, which means it's a very strong bullish trend. So if you see a very strong bullish trend, then better not go into not buy into a call warrant, because if it continues to go downtrend, you might lose money on call warrant. But let's say if you see a green color, light green color might be some possibility that you want to find entry for the call warrant. Of course, this is very surface. If you want a little bit more details, like a particular stocks, maybe you like HSI, Hang Seng in particular, just type HSI, click on the chart, then basically click on the HSI column under TA chart. You will be able to see and view the 3 months and 6 months chart. And this chart is actually prepared by one of our partners called the Trade BSA. Besides having a candlestick chart, and also I probably think that you can also see the red and green pentagon. Usually green pentagon means is also an uptrend signal, and when you see a red pentagon, it's actually a downtrend signal. Of course, all these things is just a guide. For investors who are new to this, you want some sort of guidance or benchmark on how you identify, feel free to check it out. And moving on, after you have because I mentioned about view, right? After you have the view from warrant heat map, you know whether it's a bullish or bearish. What you need to do next is choose the warrant you want, because you need to actually buy, you need to execute it on your platform. So you can find the right warrant on our website according to your investment criteria using the warrant search tool. Same thing, if you want to try it out, you can scan the QR code. It will link you straight to our warrant search page. So follow the 4 simple steps that we have right here. Step number 1, you must have a view. I know that I have repeated this for a lot of times, so I hope that all of you will remember. Next, expiry. So in this case, I'm just using MYEG as an example. Let's say if we are bullish on MYEG, we buy a call warrant, and in terms of time frame, might be slightly longer. Maybe we are looking at about 3 months. So look for warrants which will expire in 6 to 9 months. Step 3, effective gearing. Might not want to be too risky. We go for lower effective gearing, less than 5 times. So click submit. Okay, click submit, and here comes the warrants that fits into your investment criteria. Of course, there are a lot of warrants that fits into your criteria. What you need to do is the last step that I mentioned, compare the liquidity. By the way, all these data here, the buy and sell volume, bid ask, traded volume, they are all real time. So basically, whatever you see in the market, it will be reflected here as well. So what you need to do, you can actually sort, you can sort lowest to highest or highest to lowest to see which warrant has the highest buy and sell volume. So in this case, MYEG C1S will have the highest buy and sell volume, but the volume traded can be 0. So again, when it comes to liquidity, we don't look at volume traded. Okay, we look at the buy and sell quantity, the buy and sell volume Q, because this volume essentially is actually put in by the market maker, which is us. In this case, MyEG C1S belongs to Macquarie. So we are the one that put in the buy and sell volume. And one thing just to take note now, here on warrant search page, you are not only able to just view Macquarie warrants. You can also select under this particular drop-down box, you can actually select all issuers, which means warrants which includes like MBank, CIMB, Kenanga, which as you can see here, we even filter warrants from other issuers which fits into your investment criteria. All right. Next up, and also probably I would say the most powerful tool, that we have in the market right now is called the Live Matrix. And why? Okay, before I start on what is Live Matrix, let me just let you know, we are, in fact, this is actual fact and also public information. We are the first issuer to launch or to introduce Live Matrix back in 2014 when we first came into Malaysia. So we have been doing this for more than 7 years. We have been introducing this, and of course, subsequently, we did improve the interface, which I will share later. And of course, subsequently, after we introduced, a lot of other issuers did introduce this as well, because they might think this is good for the investors, which we are pretty supportive on that as well. What's so good about this particular table here? Okay, of course, it promotes price transparency. Let me tell you a story. About 5 years ago, when I first traded warrants, there is no Live Matrix. Okay, I mean, I think not 5 years ago, more than 5 years ago, about 8 years ago, when I first traded warrants, there's no Live Matrix. So after you buy a warrant, let's say you buy a warrant at 2 cents, 3 cents, 4 cents, you have no benchmark. You don't know, at what price, when maybe Mothershare move 4 cents up, I can probably sell at 3.5 cents. We have no idea at all. What you can do is only guess. Okay. Maybe, just guess, like if the stock is up 10 cents, probably my warrant will be up 2 cents. Okay, this is just a guess. So it gives you a lot of uncertainty and also insecurity. That's the reason why we want to introduce this, to at least show you, what is the price range. So based on this table itself, okay, you will be able to tell, like what is the buy and sell price at a certain price level. And that will help you to plan your trading strategy when it comes to trading warrant. Because to be honest, when we do anything without a strategy, things wouldn't work, because those are just luck. So you need a systematic way to replicate what you're doing. Therefore, you need a trading strategy. With the help of Live Matrix, I'm very confident that you will be able to do so. And how you're going to do the planning, let me show you. So assuming that, okay, I mentioned that at a different price level, the warrant will have different price as well. So assuming that for MyEG, today, the share price is actually trading at 195 buyer, 196 seller. So what will be the buy and sell price for this MyEG C1S? To be honest, if you take away this Live Matrix, you ask me, I wouldn't know. Okay, because that's the reason why we need this Live Matrix. This Live Matrix tells us that right now, the warrant bid and offer price should be 16 cents buyer and 16.5 cents seller. And both of these prices should be in the market, because Macquarie should put this price in the market. So assuming that if you are bullish on MyEG, what you can do is you can probably buy at the offer 16.5 cents. And the thing about strategy is, after you buy, you need to know your exit plan. What will be your profit target? What will be your cut loss as well? So that's very important. So next, setting up, profit target. Just take an example. I might want to take profit at 203. When MyEG is taking at 203, I might take it as a resistance level. I might want to actually reduce my exposure. I want to sell it off. So what I can do is I go back to Live Matrix, identify at 203 level, what is the price I can sell? What is the warrant price that I can sell? So there you go. You can definitely sell at 18 cents itself. So once MyEG hit 203, if you're queuing to sell at 18 cents, Macquarie will actually buy back from you. So therefore, it's actually very systematic and easy. It's transparent. All right. And the best part about this Live Matrix, by just looking at it, you can tell 18 cents, 18.5 cents, which means this particular warrant is actually on a tight spread. So once if you see any warrants like 17 cents buyer, 19, 20 cents seller, then of course you avoid. Okay, those warrants are on a wide spread. Don't buy at all, because it will increase your cost of trading. I did mention about, we launched this Live Matrix in 2014. So it has been some time now, since we have been using the same one. So just last year, we also upgraded our Live Matrix Plus, to add on more feature that will benefit our investors in general. Of course, right now, the Live Matrix Plus that we have allows you to display up to 9 different Live Matrix tables, all on the same page, which means once you open, you keep it there, it will be there, 9 different Live Matrix. If you want to cancel, you basically can refresh or reset the whole Live Matrix Plus. Besides that, we have also added these quick terms, which allow you to view and compare key terms, like I mentioned earlier, like effective gearing, sensitivity, expiry date. So you don't have to, go search again, what is the expiry date of this particular warrant. So you put it on the Live Matrix Plus, and you just click quick terms, then yes, it pops up. All the warrant terms will pop up here. All right. And last but not least, we have introduced these very cool warrant indicators, which will help you to identify whether, whether the warrant is near to expiry. Is it sold out? Okay. Does it has good liquidity? Is it more sensitive? So we have all these very interactive logo, I would say. Like the leaf means actually new warrant. So if you do see a leaf on the particular warrant, which means the warrant is actually newly listed. And for example, here DNO, you see like a ball of water here. It means that this particular warrant has the highest liquidity in the market. So this will help you to speed up your warrant selection process. And moving on to case study, which is something I think a lot of investors, you are pretty excited about this because yes, I know all this theory, I know you have tools, but how I make full use of these tools and this product knowledge to enhance my portfolio performance, that's the most important thing. So of course, first of all, I'm going to talk about how you make money on the uptrend. And subsequently, I'm going to touch on like how you trade downside, like what happened last year during pandemic when Dow Jones, S&P 500, everything dropped, how you capitalize on the trend and make money out of it. First of all is I would like to actually share about this case study that I have. Of course, on 18, this chart is actually is close to about 8 months chart. On 18 November last year, 18th of November last year, the TM shares actually traded above. They shown a breakout. If you can see here, the breakout, it trades above the resistance of 4.48 and it closed at a high, close to high, 4.64. So this is perhaps a good indication. I mean, of course, there are a lot of ways you can use to actually, find indication on the uptrend, but this is pretty dominant and actually this is pretty obvious. There's a breakout. And what happened next is just merely close to 3 months down the road on 15th of February 2021, TM shares actually finished at 6.55. It's up about 41%, which is not too bad, even like trading the stock itself, you can make a 41% gain in merely 3 months. As you can see the chart here, once it break out, it all go all the way up. And what if during this period of time, once you have identified that there's a breakout on 18, you buy into warrant, what is the potential upside? Looking at this TMC65, looking at the chart itself, what we can see here, yes, this TMC65 is a good warrant here because why? It follows the movement of the underlying, which is TM. So the blue line is actually TM share price. As you can see, as TM share price goes higher and higher, TMC65 also go higher. So this is the kind of warrants that you should buy because there's no point if you buy into a warrant that doesn't move when the mother share is moving. All right, and the tip here is that remember, call warrants move in the same direction as the underlying. So if you're buying into if you have bought a call warrant which move in opposite direction, then probably you need to call the issuer and ask what happened because that shouldn't happen theoretically. And this is how you can actually gain exposure, not just exposure to a particular share. Warrants allows you to gain leverage exposure, especially in this case, TMC65. I'm sure all of you are excited to see, how much gain you can make, potentially how much gain you can make if you were to buy TMC65 back on 18 November rather than the mother share. So here's the comparison. All these data are actually from Bloomberg. So as you can see, I mentioned earlier, superb gains from TM shares, but the performance from TMC65 is even better. is really 216%, okay, in merely just 3 months. But to be honest, of course, this will be theoretical, you know. If you were to buy low, sell high, yes, you can make up to 216%. But what we are trying to, the message that we are trying to actually convey right here is, because of this leverage, perhaps you don't have to hold for too long. You bought it on 18th of November. You probably hold it for 1 month. Your potential gain can be maybe up to about 80-90%, which is almost double of the gains of the TM shares if you were to hold 3 months. So this is the power of gearing. And of course, for this particular warrant, the effective gearing is 5.1 times. Therefore, you see when TM shares move up by about 40+%, 41%, the warrant actually moved by 260%. So it matches one. So this is the importance of why we need to use effective gearing. Don't refer to gearing anymore. Those value has no meaning at all. And it's actually meaningless. Look at effective gearing. How about market retracement? You know, we are always being very optimistic. To be honest, in the market, yes, Malaysia market itself, like previously we got no short selling, nothing at all. So market supposedly is going all the way, but of course, there are certain situations that, you know, we did not predict it happen, like COVID-19. We did not predict COVID-19 to be here and lasted so long. So what can you do, you know, when market retrace or even correction? So I have another example here. This one I'm actually using the Hang Seng Index on it's actually pretty recently, on 23rd of March. The Hang Seng Index actually broke below the yellow trend line to finish at about 28,500. Okay. Probably what you need to focus is actually the breakup. Same thing, breakup is always an important indicator, and you can always use this reference. Of course, you always need to use other indicators like RSI, moving average to confirm this. But usually this sort of breakout is actually quite meaningful, I would say. And see what happened next. 2 days later, of course, it went lower, but the index rebounded. It went all the way to almost close to 27,500, which is about 1,000 points all the way down. And subsequently, it rebounded to finish almost unchanged. Let's say if you were to actually buy a put, you shorted the market on 23rd, perhaps 25th, when you take profit, it's actually quite reasonable because you do see somehow a rebound after that. And this is how a put warrant should perform. If you were to short the market that day, put warrant should always move in opposite direction. The orange line is actually the HSI HGN, which is a put warrant over the Hang Seng Index. As the underlying share goes up, as the underlying index goes up, it will go down. All right. So remember, it should move in the opposite direction. In terms of performance, by how it works is that here is your new avenue to actually short the market or take a bearish view by trading the downside with put warrant. And assuming that you bought this put warrant on 23rd, so here is your gain as well. As the index actually closed 2.1% lower within 2 days. And if you bought this put warrant at 71.5 cents and you sell it at 83.5 cents, this is assuming that both are closing price. You pocket yourself a 17% gain from just a merely small drop in the Hang Seng. But let's say if you're expecting a 10% drop in Hang Seng, then of course your gain will be much higher than 16.8% because of the gearing effect. So generally, you can see here for index warrants, the effective gearing numbers are usually higher. It's actually much higher than the normal stocks one. 8.4%, I would say, consider quite reasonable. You will definitely able to find some index warrants which with effective gearing up to like 20 times. So those are the very high risk ones. And lastly, for those who stay until this moment, I'm very excited to share with you, we have listed a new product, a new warrant in Malaysia. It's called the HS Tech warrant. And the underlying warrant is actually the Hang Seng Tech Index warrants. We are the first one and we are the only one to actually launch this warrant in Malaysia last month. So what exactly is this Hang Seng Index? Okay, of course, by definition, when we talk about tech, okay, and Hang Seng, when you try to combine Hang Seng and also tech together, which means these tech stocks, this group of tech stocks are actually listed on Hong Kong, okay, Hong Kong Exchange. So how they select, they do have Hang Seng do have their own selection process on, what kind of technology companies will qualify. So long story cut short, you can regard HS Tech Index as like the Nasdaq of Hong Kong. Okay, it's the Nasdaq of Asia. So because when you really look at the composite, what kind of stocks are actually listed or actually present on included on the Hang Seng Tech, you will realize that out of the 32 constitution members, the more notable names like Alibaba, Tencent, Meituan, Xiaomi, in general we call it ATMX, they are actually all there. In terms of weightage, it's also very heavy. Just this ATMX 4 stocks itself, the combined weight is actually more than 30, which means if ATMX drop by 4%, okay, 4% potentially will cause a 1.2% drop on the Hang Seng Tech Index. So this is the opportunity here. If you are bullish on the Asia Tech or Hong Kong Tech, you can actually trade through Malaysia. You do not have to open a new account in Hong Kong just to trade all these Hong Kong stocks or Hong Kong tech stocks. And why to trade Hang Seng HS Tech? Because we have so many different index like S&P 500. We have Hang Seng. We do have Hang Seng, which is pretty popular. Why you trade? Because number one, this HS Tech is much more volatile than Hang Seng Index, which means for a small movement in the HS Tech, you will still be able to make money. And generally, the volatility is pretty crazy. I would say pretty insane, because it ranges from about 2% to 5% on a daily basis. It's actually one of the highest among all these index around the world. And of course, number two, ease of access. Don't need to open new account. Use your existing CDS account, just trade. Just type HS Tech on your platform. I'm very sure you can find 7 different HS Tech warrant listed on Bursa at this current moment. If you want exposure to technology stock, you don't know which technology stocks. There are so many. Like almost on a weekly basis, there are new technology stock listed on Hong Kong Exchange. You don't know which one is good, which one is performing. No time to really study about it, but you're confident about tech or you are bearish about tech. Yes, Hang Seng Tech is there for you. And of course, last but not least, for index warrants, generally we have somehow equal amount of call and put. So you have wide choice of selection. Not necessarily you only can make money from an uptrend market. If it's a downtrend market, you are still able to make money. Let's look at the performance. I mentioned about 7 different HTX Tech warrants listed since 9th of March, which is close to a month from then. We have 7 right here. So I have also pulled out the performance of all these warrants during this period of time from 22nd of March to 31st of March, merely just 9 days. So what you can see here that in terms of price changes, the underlying here is actually the HS Tech Index. The index actually fell about 3.8% during this period of time, but this is how the warrant actually performed. Generally, all calls should move in the same direction. That's why you see all the red underperforming. Of course, drop even more because of the gearing effect. But on the other hand, if you are looking at put warrant, you can potentially make money out of this. All right. So it's pretty clear how call and put warrant works here. It's just how to select. You need to really learn how to look at the chart, read more Hong Kong news as well. And most importantly, please bear in mind, our HS Tech warrant does not follow HS Tech Index. It follows this futures called HS Tech futures. And a lot of you will be confused. Yes, I know HS Tech futures, but a lot of software might want me to pay money to get the access. So do not worry, because Macquarie, we offer you free. Okay, we offer you free on our website, the same website that I showed you earlier, malaysiawarrants.com.my. We have it on our homepage under the home under the live index futures section, which I highlighted here on my slides here. You look at HS Tech. So we have HSI, HS Tech. These two, they are both real time. So at any point of time, you want to refer to the real time price, just go to the website and click refresh. There you go. For more warrants information, I would strongly suggest all of you to join us on the Telegram. As of today, we are actually the largest Telegram group when it comes to warrants. You can join us by scanning the QR code here. Might give you some time to scan it. So what we usually cover on our Telegram ranges from, for example, market news. For example, what is the hottest warrants today in Malaysia? Perhaps some underlying news, like for example, Maybank, is up 10%. What happened to the warrant? Is the warrant up or down? So this sort of update. We will also remind our investor on the sold warrants expiry, and informing investors about new warrant listing, as well as if you have any future events as well. We will put it all there. So if you want to enjoy, the privilege of having to get the first-hand information from the issuer ourselves, do join us on Telegram. You can just scan this QR code, or you can just go to Telegram and type Malaysia warrants. All right, Malaysia warrants with S. This is an example of what kind of content we provide. Like for example, to the left here, we do highlight, if you're looking for good trading ideas, we highlighted that there's a green pentagon on MyEG chart. So how you can select the warrants based on different criteria here. We also inform that, we also make announcement on the Telegram to say that the HS Tech C1 is actually close to sold out. So if you plan to buy, don't buy it yet because this is sold out. Maybe you can consider other warrants. So these are the things that we really, really want to get out to the market so that you know what is happening. Moving on, if you are active on Facebook as well, do follow us, like and follow us. We might have a few big campaigns coming up. So do stay. Also join our Facebook page. Go to the page. You can actually scan the QR code right here. And I'll say that's all for my slides today. So yes, Shane, I'm all ready for some questions.
Thank you very much, Kaming, for your wonderful presentation on leverage your portfolio with structured warrants.
Yep.